heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York. Ed Ludlow is off. This is Bloomberg Technology. Coming up, we break down Oracle's earnings and its push into the cloud computing space as the company hits a record high. And we talk all things Elon Musk ahead of the vote on his $56 billion pay package. Plus, Paramount walks away from a deal with Skydance as it heads back to square one to find a new bidder. We discuss that and so much more throughout this hour, including record high after record high, and a new company back on top. I focus in on what's happening with Apple. Extraordinary move for a company already at about a $3 trillion market valuation to move 12% in 2 days, following, of course, WWDC, following the integration of artificial intelligence and OpenAI. And, of course, it therefore starts to pip a company to the post in terms of its overall market valuation. Who now reigns supreme? Apple number one once again. Take it versus Microsoft. Microsoft, of course, had been the number one player for several months. Now we are back eclipsing it for Apple. Check out the white line, suddenly crescendoing to $3.3 trillion. We've got also, though, still gains for the likes of Microsoft, gains for the likes of NVIDIA, also at about a $3 trillion market capitalization. We are fueling some of these valuations across the board, and also looking at what happened for Oracle, too. Another new record high for this particular player after its actual earnings show real driving force when it comes to its focus on cloud computing. How can it compete versus some of the other players like a Microsoft? We're currently up 9.8% on one day alone for Oracle after its earnings came out after the bell yesterday. Let's get straight to it. Brody Ford joins us now for more. And a good day for one Ellison, at least. This one being Larry Ellison. What did he make of the numbers?
Yeah, absolutely. With Oracle, it is all about that cloud infrastructure number, right? We've seen across software in recent weeks that it's been really difficult for those selling applications. Lucky for Oracle, their big growth bet is that infrastructure, right? And so we saw them sign a good number of deals. The bookings were higher than anticipated. And there was that really important partnership deal that Microsoft and OpenAI said, hey, we actually don't even have enough capacity. We're going to use Oracle's cloud to help train and work with OpenAI, which that was a very validating point for a lot of investors who said that, okay, I guess what Larry's been talking about, that Oracle is the best for AI workloads, there's got to be something there.
Yeah, Safra Catz coming out saying we've had record contract sizes being signed in the previous quarter. That's going to continue into the second half of the year, Brody. But I'm really interested in, well, where is the fly in the ointment? What about the focus on healthcare data? Because that is still not growing particularly.
Yeah, the whole healthcare bet was for sure kind of not a big part of the earnings here. Of course, you know, Oracle purchased Cerner, $28 billion 2 or so years ago. So that's at the center of our company now. It hasn't panned out too well financially thus far, but investors are saying, hey, you know what? If you can clock 90 billion in bookings on cloud infrastructure, maybe Cerner doesn't matter so much.
Well, for sure, markets thinking that Cerner doesn't matter so much at the moment. We're up $35 billion on the day for Oracle and having its, well, currently trading at the highest on record. Brody Ford breaking down the numbers for us. We appreciate it. Turning to the broader markets, and look, it is not just Oracle at a new record high. We are across the board seeing money flowing into equities, into bonds. We're seeing S&P 500 up more than a percentage point. A new record high, 54.38 is where we trade. The NASDAQ also powering up 1.8%. Why? This is a macro story of the fact that CPI print showing a 3.4% year-on-year growth. Inflationary pressures, therefore, the slowest in 3 years. The two-year yield absolutely plummets some 15 basis points. We're at 4.68% as people start to factor in that, yes, we will get that rate cut come November, maybe even come September. We all wait for the Federal Reserve decision later on this afternoon. Bitcoin on the up and up. We're up more than 4%, 69,956. This paints a picture of risk on. Sylvia Jablonski, CEO and CIO at Defiance ETFs, to really talk as to whether this is a wise decision right now.
Hi, Caroline. Well, I think, you know, in terms of the Fed today and any potential cuts, I don't anticipate anything coming. I do think that the data was great. You know, you just kind of ran through it. Inflation is clearly on the downtrend. This is exactly what the Fed wanted to see. It gives them that room to certainly breathe and to be a little bit less hawkish. But if we take anything from Fed Chair Powell, it's that he's looking for more data before they make a decision. So I think, the call will be a little bit benign. It won't crash the markets like it has in a few months past. And so that's a good thing that we have some stability there.
Stability enough to continue to think technology is what leads us higher?
I think that technology is going to continue to lead us higher. And, the reason for that is that we're just in the beginning stages of this AI, fourth industrial revolution. It's only now starting to play into the earnings of a lot of the Mag 5, 6, 7s that have been reporting this last quarter. So I think it's just in its infancy in terms of how it's going to impact revenues in the bottom line. And we haven't even started to talk about how AI is transforming healthcare, how it's going to transform, aerospace and defense, banking systems, and things like this. And so the companies who are the key ingredients to that revolution are essentially the Mag 7. And so I think they keep going. And also, look at the balance sheets. They're earning their multiples. Earnings projections are set to be about 14% or higher for the next couple of years. So, I think barring any major change in inflation, any geopolitical event, politics, of course, I think tech is a safe place to play.
Apple's a weird one, though, because we're not expecting double-digit growth in revenue. In fact, the market is anticipating a 3% increase in revenue for the next fiscal quarter, Sylvia, and yet they eclipsed Microsoft back as the most valuable company and rallying an extraordinary 12% in the last couple of days.
Yeah, and so Apple hasn't done anything, though, for a couple of years. And it's really interesting because when the whole, everything was kind of falling apart a couple of years ago in 2022, all the tech stocks were kind of, down and crashing at some point. And Apple was the name that was holding up the market. This year, that shifted to NVIDIA. And, here we are, NVIDIA's still up there. And Apple has kind of regained its seat on the throne here. Next to the top players. And I think the story there is, pick up in China and then also some talks of the AI integration and things like this. They're finally on the map with that. We just hadn't heard anything compelling from them in a long time about that. But, the big story is if you start getting upgrades on phones, because actually this time they are different and they have that AI play, and then pick up in China, probably deserves a little bit of a stock increase there.
Can you talk us through some of the not just fundamentals, but technicals that are going to be at play as we head towards the end of the first half of the year and we get a rebalancing moment in June? We saw some big differences and shakeups in market capitalization. Where will money move? How will that continue to feed the biggest?
Yeah, I think, when you have about 90% of the growth of S&P 500 coming from 4 or 5 names, and then 40% of the growth coming from the next 2 behind it, I don't think actually that the rebalance will put it into kind of rebalance. It'll equalize it a little bit better on the next rebalance, but it's probably not going to change because the top market cap names are going to remain the top market cap names, and they're going to end up leading the index forward. But around that type of trading, when you're selling off a little bit of this and picking up a little bit of that, you do get some market movement. But I just think that they're going to remain the top players, and there's probably not going to be a huge amount of impact from the rebalance coming up.
Yeah, that all to do with perhaps the technology select sector spider, much being written by Bloomberg Intelligence, Sylvia. What about your own ETFs? Where has outperformed? Where have the bets been right?
Yeah, so ours are in line with the market. So our 2 biggest, ETF plays are a ticker called 5G and one called Quantum. And essentially what they do is they represent AI, machine learning, and then all of the, widgets that go into supporting that. So 5G is the connectivity technology factor of it all. You need low latency, obviously, to process this data to make driverless cars work and all of that. And, we don't talk about 5G as much as we probably should. I think pretty soon we're going to be talking about 6G, actually. And Quantum is just it's just benefiting because it's all the AI stocks. It's NVIDIA. It's, it's all the kind of home runs there that are leading that revolution. So that one's just been on a tear for us this year. And believe it or not, commodities too, right? We've got a uranium play out there. And when you think about things like uranium and copper and just energy in general, the need to process, to run the electric grids for AI, those names play into.
Crypto still a bet?
Yeah, I still like crypto. I think it's becoming further and further commercialized. I think that there are enough of institutional retail players out there that are willing to allocate a small percentage of their assets to cryptocurrency. It at some point started to diverge from tech. Now it's playing along with tech again this week. But it seems to be a core holding in a lot of portfolios. Look, the billions of dollars that flew into the ETFs just tells me that it's around to stay. Ether and Bitcoin in particular.
Sylvia, it's great to have you back on the show.
Thank
you so
Caroline.
much for spending some time with us. CEO, CIO at Defiance ETFs, those on a tear in line with the market. Meanwhile, coming up, Musk's X platform gains among GOP users. More on that next with our own Kurt Wagner. Meanwhile, there is another company that is doing particularly well today. In fact, it has been for the last couple of days. This on a partnership with Apple. We understand a firm is extending its gains after the Apple Pay deal. The buy now, pay later company said its payment products were expected to be available in US Apple Pay users this year. We're up almost 9%. This is Bloomberg Technology. Time now for Talking Tech. First up, Paramount chair Shari Redstone has walked away from a deal to sell her media empire to David Ellison, the son of the Oracle founder. Redstone rejected the latest proposal from Ellison Skydance on Tuesday after lengthy negotiations. Still, there are other bidders waiting in the wings, including Apollo Global Management, Seagram's Air, that's Edgar Bronfman, and independent film producer Stephen Paul. Plus, ByteDance is cutting about 450 jobs in its Indonesian e-commerce arm. Now, the move marks the first round of cuts since combining its TikTok shop with local rival Tokopedia, and that was in January. According to people familiar with the matter, ByteDance is reducing staff across its e-commerce teams, including advertising and operations. And former President Donald Trump met with several Bitcoin miners in his Mar-a-Lago estate Tuesday night. That's according to the executive chairman of CleanSpark. Trump told attendees that he loves cryptocurrency, said he'd been an advocate for miners if he retakes the White House. Now, staying in politics and with it, social media platform X, formerly known as Twitter, of course, has now grown in popularity among conservative users. Now, according to a new Pew Research study, the number of Republican users have more than tripled since Elon Musk's purchase of the site back in October 2022. Joining us now, Bloomberg's Kurt Wagner. And a surprise to you?
No, I don't think so. I think, when you look at what this report came out with, this idea that X is becoming much more popular with the political right, it sort of confirms what I think we've all seen anecdotally for the last couple of years, right? And that's led by the new owner, of course, Elon Musk, who has been very vocal that the company he bought, he thought was very left of center politically, and that he wanted to move it more to the center and to the right. And it's also been, his own actions, right? Reinstating President Trump, building relationships with other right-wing kind of leaders around the world in Argentina and Brazil and places like that. So he's sort of setting the stage and setting the example, I would say, for, what he wants X to be. And we're seeing this in the numbers now, that it's becoming much more popular with that, politically conservative group of people.
Therefore, are we seeing politically left of center exiting the platform?
Yeah, well, some are exiting, but more than that, they're saying that they don't feel welcome. There was a higher spike in liberal people who were saying that they were more likely to be harassed or bullied on the service than those who were conservative. So it's sort of switched where, for years, Caroline, as you remember, conservatives said, hey, Twitter isn't a place where I'm welcome. Twitter isn't a place where I can say what I want to say. They didn't feel like it was their home. And it seems like those roles have reversed. Now it feels like, the data sort of suggests that conservatives believe that X is the place for them, and liberals are feeling less and less welcome there.
I just want to turn our attention to another one of Elon Musk's companies, SpaceX, and indeed his behavior there. There's reporting, this is all coming from the Wall Street Journal, Kurt, at the moment. I'm sure you read the story, that Elon Musk has pursued women working at the company, apparently for sex, including a former intern, citing affidavits signed by this woman and other interviews. What do you make of the reporting coming from the Wall Street Journal today?
Yeah, I mean, it's a bombshell of a story, and these allegations are quite serious, right? As you point out, that Elon, while running this company, was seeking relationships, sometimes sexual relationships, with women who were his subordinates. And I think, it certainly creates these questions about the power dynamics of Elon's companies, and not just SpaceX, but I think it raises questions about all the companies that he's running right now. And is he abusing sort of his role as the leader, the executive, the person with the power to create these relationships? And these are all, again, allegations at this point. Obviously, the reporting looks like it's pretty solid, but I just think, again, it raises these questions for his other companies, and also for, Tesla right now. They're about to have a big vote, of course, on his pay package and stuff. You wonder how much any of this type of negative press around him could have an impact on what happens to him in his other companies in the Elon universe.
Well, you point us forward, Kurt Wagner. We thank you very much indeed on all things Elon Musk. And stay with us, because later in the hour, we are going to be discussing all things Elon Musk with Ross Gerber of Gerber Kawasaki. We're going to be previewing with him tomorrow's all-important Tesla shareholder meeting. You don't want to miss that conversation. Meanwhile, coming up, we turn to AI in the workplace. Asana is out with a new report on just that. We'll discuss how you're feeling about artificial intelligence. Paige Costello is joining us next. Then let's just keep a close eye on some of the other companies that we're continuing to follow here. Post earnings, Post down 5%. I mean, we had seen it actually gain after its first report as a public company, but now turns negative to the tune of 5%. This as its fiscal 2025 outlook, according to Bloomberg Intelligence, well, had some muted sentiment going into the software peers. Ultimately, we thought consensus for the 25% plus revenue growth through 2028 would actually have been a pretty ambitious task. We're now digesting some of these numbers. The results were uniquely impressive, according to Guggenheim. Not now. This is Bloomberg Technology. Time now for a weekly AI in action segment. And today, we're looking at artificial intelligence in the workplace. Now, only 7% of organizations have mature AI implementations. Their employees are 3 times more likely to report productivity gains from using AI at work. Now, that's one of the key highlights from a great new report coming from Asana. It's all about the impact of AI in the workplace, and we're going to bring in Asana's head of AI, Paige Costello, for more on the findings. And actually, what took me by surprise is people are feeling more optimistic about using it in the workplace.
Absolutely. Executives are very excited, and all the individual contributors are also starting to use it quite a bit more. One of the biggest things we saw is that more than half of knowledge workers report that they're using generative AI weekly. That's up 36% in just 6 months.
How productive is it making them? What sort of gains are those that are being early adopters seeing?
Yeah, well, we see that the people who use it daily report the highest productivity gains. 89% of people who use it daily say that they're seeing those gains, and only 39% of people who use it monthly see those gains. So we know that the more you use it, the more value you get out of it.
Now, there's perhaps some sort of nervousness still. Certainly if you're a student, for example, using it, you're in many ways getting a pushback from those that teach you. What about in the workplace? Are people feeling that you're cutting corners, or that actually this is the way you should be working?
Yeah, it's up to organizations' leaders to really improve AI literacy and create a norm and set of expectations about how to use AI. This is a big gap where a lot of people aren't receiving training or guidance. Most organizations don't have a rollout strategy for how to train their employees at onboarding, how to really set up their organizations to roll out which vendors and make selections about how to get the most out of AI. People want to know that they're using it the right way and that they're going to be supported and celebrated for using AI for good.
Why is that infrastructure perhaps not being built around the employee base as quickly? Is it nervousness on doing it right and with the right guardrails? Is it just a lack of knowledge from the top?
I think there's a bit of curiosity about, do we have safe and reliable AI? Is it going to give us the right decisions that we can make from the data that we're getting? But honestly, I believe that a good deal of this is purely uncertainty about what it takes to be a newbie. A lot of these organizations and leaders are themselves learning, and trying to create a plan while learning at the same time when the terrain is changing so quickly is really challenging.
The reason Asana can do this sort of deep dive research is because you're a work management platform. You're helping companies, T-Mobile, for example, Amazon, manage their own workflows and executives therein. How are you using it? How are you using it for your clients too?
Yeah. Well, I would say a few things. One, AI literacy is a priority for our organization. We want to make sure every employee knows how to use AI and how to get the most benefits for their teams. We have an AI council that thinks creatively about what are the tools that we need to use and how to deploy Asana. So Asana is an enterprise work management platform used by 80% of the Fortune 100 to drive clarity and accountability at scale. And what we see is that people are using Asana's AI capabilities to quickly create status reports across cross-sections of goals and portfolios of work, but also work with our new AI teammates, where they can delegate specific parts of the workflow and jobs to AI in the context of their process in order to have more confidence that there's a level of determinism that it will do the right thing.
Let's talk about hallucinations. Let's talk about doing the right thing. Have you seen any of that? Have you got the statistics of how your own offering, Teammates, is working and performing and improving?
Absolutely. We're paying very close attention to the evaluations of different models and how they perform in the context of Asana. What I'm most excited about is the way Asana's data model works, is there's a context around the people doing the work, who's doing what by when, the timing of that work, and the ultimate goals they're laddering towards. And so what we see is the context of this work helps AI engage with more knowledge. So instead of surveying a vast amount of data and trying to surface some summary, AI is given a very specific set of instructions. Here's how we work. Here's what we're trying to achieve. Here's exactly what I want you to do. I want you to triage this request. If there's enough information, send it to this team. If there's not enough information, put it over here. I know that I need data on this. Please do some initial discovery and answer me these 3 questions. These are the sorts of tasks that people can confidently ask AI and Asana to do in the context of where their teams already work. Asana's been thinking for a long time about the coordination of work across teams in complex organizations. That's a hard job.
Yeah.
It's always complicated. But coordinating work with AI is the future, and there needs to be a structured way to understand what have we asked AI to do? Did it do what we asked? And see the impact of that work.
We're all getting better at those prompts. Asana's head of AI,
Oh, yeah.
Paige Costello. Thanks so much for spending some
My
time with
pleasure.
us today. Now, coming up, we'll get the lay of the land and what to expect from Tesla's shareholder meeting. Ross Gerber of Gerber Kawasaki's going to be pushing us forward to that event that occurs tomorrow. Meanwhile, we push you towards what earnings we have coming up. Broadcom after the bell. We're at 1.6%. AI companies doing well. This is all a reflection of this chip maker, next generation chips. How are they going to be reporting their revenue increase? We're expecting a 38% increase in revenue for the fiscal second quarter to $12.1 billion. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. A quick check on these markets, which are macro-fueled today. We have record highs across the board, whether you're looking at the S&P 500, whether you're looking at money pouring into technology stocks, pouring into the bond market as well. Why? Inflationary pressures. They dial down. 3.4% year on year for a CPI print that is the coolest that we've seen in 3 years. What space does that give the Federal Reserve to cut rates later into the year? We have the Fed, of course, announcing their decision in but a few hours' time. We're currently seeing Bitcoin getting a little bit of a move higher. Risk assets push higher, 3.8%. Move on to the individual movers because we've got a tussle at the top. We've got market capitalizations that are eclipsing more than $3 trillion, and Apple eclipses Microsoft. We're back as number one for Apple. We're up another 5% after moving 7% yesterday. Extraordinary move for such a huge weighting of these indices. But Microsoft's also up 1.2%. It's more than $3 trillion in terms of market cap. So too is Nvidia, up almost 4%. It too is exceeding $3 trillion. And Tesla, look at that, up 4.3%. Interesting calls coming from Cathie Wood as to where we'll see this price target eventually. Remember, the call for 2,600 is where they see it for 2029 for ARK Invest. But we've got more to digest when it comes to Tesla, and it's coming imminently because we've got a shareholder meeting tomorrow, during which Elon Musk's $56 billion pay package will be debated, it'll be voted on, and hearing now directly from an investor. Gerber Kawasaki CEO and President Ross Gerber joins us, along with our very own Max Chafkin, who is all in on Elon Inc. when it comes to the podcast around his various companies he controls. Ross, I go to you first. Are you voting for or against?
Well, I voted against the pay package mostly because I feel like it's a continuation of the disaster of the board of directors of Tesla's created by doing the pay package wrong the first time and just trying to re-ratify the same thing. I think is just creating a lot more issues and problems than if they would have just done a new pay package and done this correctly the first time. So, at this point, paying Elon $50 billion when you've seen the performance of the company falter since its purchase of Twitter, and he's made really no effort to sell vehicles and a huge effort just to get his $50 billion, it really is the wrong message to send to shareholders, corporate governance. Basically, this is a case study in how boards of directors can be so horrible.
So horrible. Max, your take and returns. I want to go to Max Trafficking here on the fact that the share price is still a lot higher than it was perhaps back in 2018. It has come down from its heady heights of 2021 when it's eclipsing more than $400. But your perspective here on him being distracted as Ross talks to.
Yeah, I think we're looking at a close vote here because on one hand, you have historically Elon Musk has been able to basically get anything he wants from Tesla's investors. And there has been this feeling among investors and especially among the board, which of course includes a lot of Elon Musk friends, loyalists, even his brother, that he can basically do whatever he wants. Whatever he wants is good for Tesla. On the other hand, he has not performed well by any normal metric as CEO over the last year or so. The stock is down. There are all these distractions. The Wall Street Journal story today is just the latest example, right? It's just been a series of kind of misfires, difficulties with poor stock performance. And at the same time, Musk is asking for $56 billion. Now, of course, he'll say, well, this is an older pay package. You look at the 5-year trajectory, it's great. But again, not every investor is going to be swayed by that.
Yeah, to be fair, went from a price of about 20 in 2018, Ross, all the way up to nearly 400 in 2021. I'm interested, therefore, in your view of him as a leader right here, right now. He says, look, if you don't give me more control of the company of Tesla, if you don't give me this money, I might walk. I might do more AI stuff over at XAI. Would that worry you?
Well, I think he's already done that, in fact. So that's why the performance of Tesla has been so poor since he purchased Twitter, is because he's not working at Tesla. He's been we consider him the pigeon CEO now, flies in, kind of craps on everybody, flies out. And, it's just not running the company compared to 2018 when he was sleeping there and working 24/7 to build this wonderful company. So, I benefited greatly from the success of Tesla, but I also took enormous risk investing with Elon over the last 10 years. And many thought the company was going to go bankrupt 5 years ago, and I supported him through all this. And so the fact that I benefited greatly as a shareholder was a byproduct of the risk I was willing to take on Elon, and that it paid off. It was great, but that doesn't change where we are today. And that's the issue, is what's going to happen to Tesla over the next 5 years. Cathie Wood's obviously wildly optimistic, but if he leaves the company because he doesn't get what he wants, well, where's Tesla going to be in 5 years, right? So the fact that he has so much money, he's got 80, 90, $100 billion in net worth in Tesla, but yet that's not incentive enough to work at Tesla. I mean, he made over $90 billion just in gains from the stock he owned already. So it's not like he hasn't benefited greatly from Tesla's success. And so this is why this whole thing is outrageous and ultimately going to cost shareholders $25 billion of tax that we'll have to pay for when he gets this award, if he gets it, because that's the taxable consequence that shareholders are going to have to pay. So this is a tough situation for shareholders.
Interesting context there. Max, the shareholders you speak to, the way in which you do your reporting for Elon Inc., I mean, you said it's going to be a close call here. Have we heard from some of the big institutions as to whether they support him, and why would they support him?
Yeah, broadly speaking, there are some exceptions to this, but you have a lot of institutional investors who are opposed to the pay package, and then you have a lot of retail investors. Basically, many of these people are just, Tesla enthusiasts, people who really care about the brand and really care about Elon Musk, and they are by and large supporting Elon Musk, at least to talk about our reporting and what Elon Musk himself is saying. Take that with a grain of salt. So you have those two things kind of in tension, and the question is, who shows up to vote, and how many of them are there. Tesla has been campaigning really, really hard over the last couple of weeks. We talked about on the podcast. You have videos. There's a video of Optimus, the Tesla robot, talking to people, saying, "Oh, you should, vote your shares." And as we said on the podcast that dropped yesterday, they've been calling Tesla employees. You've seen a lot of former Tesla employees show up on Twitter in support of this. So there's a lot of activity. It's almost like a political campaign.
Yes.
Weigh in here, Ross.
No, I mean, I've gotten calls and emails and all kinds of ads, and I was like so insulted that after a year of saying that Tesla needs PR and Tesla needs ads to sell Model Ys and sales going down and down and down, then they pull out all the stops for Elon's pay. They have a PR team actually working. I can't even tell you how obnoxious it is that this is about his pay, the richest man in the world, while the company's languishing and can't sell Model Ys to save their lives, and they're discounting them left and right, and they won't run an ad. So I think this has become like a referendum on Elon, and it really shouldn't have been. And this is really just a horrible situation for Tesla shareholders.
Ross, can I dig in on the PR team working double time? Because they are surely working double time today. And there is this Wall Street Journal report, which we cited earlier in the show, where Elon Musk is being accused of having pursued women working over at SpaceX. This is Wall Street Journal reporting. But does this affect you as a shareholder of Tesla in your viewpoint of him as a leader?
I don't think he's pursuing women. I think, I don't know what he really does, but I wish he was spending more time with women, to be honest. I think that would help him greatly if it was in a positive way. But I don't see him as that type of person. I think he's very, very focused on his goals, which is getting off Earth, replacing the human race with robots, and living on Mars by himself. So I don't know. But I don't take these kind of claims, personal claims, as valid unless they're actual, proof of this stuff.
Okay, so questioning some of the reporting there, Ross, I'm interested, Max, in ultimately where we go after this vote. Because if it's a referendum on Elon Musk himself and it doesn't go his way, well, it doesn't actually or even if it does go away, it doesn't actually affect whether or not the money goes to him. It's still all about a judge, right?
Yeah, we talked about this earlier this week. This is not a binding vote. It also doesn't have any legal consequences. Tesla's hope here is that the vote is overwhelmingly in support. They take it back to the Delaware courts, and this is part of their appeal. And that is the plan, kind of a novel legal strategy to save this pay package so they don't have to renegotiate it. I think that the challenge here, and what will be really difficult for shareholders, probably Tesla employees as well, is if the vote does not go his way, where does it go? Because we know from having followed Elon Musk, he is not going to be happy. He's already made threats, as Ross is alluding to sort of essentially take his talents elsewhere. And you do wonder if he's faced with a smaller pay package. Well, how much smaller is it going to be? And then it becomes this challenge of keeping Elon Musk motivated, which again is funny because he's getting paid a lot of money one way or the other. And he's also said that Tesla, is his life's work. On the other hand, AI is very hot. He has XAI. There is this threat. So you worry if you're an investor that he's going to take his ball and go home, and that could lead to massive upheaval at Tesla if that were to happen.
Well said. We thank you, Max. Just go and watch listen to that podcast, however you consume it. Dropping yesterday, All Things Elon Inc. Meanwhile, Gerber Kawasaki CEO and President Ross Gerber, as always, animated and thoughtful on the show. We thank you very much for contributing ahead of a vote you already said no to. Meanwhile, coming up, we're going to be joined by Susan Lyne from BBG Ventures on the heels of its second annual Accelerate Summit, all things private companies. That's next. This is Bloomberg Technology. Time for VC Spotlight. Let's talk early stage investing now. Susan Lyne, co-founder and managing partner of BBG Ventures, in town, showing up, of course, with the annual Accelerate Summit, which is just taking place, bringing together hundreds of female diverse founders across the country to come here to New York to talk about raising money, to talk about lessons learned as founders, to help steer each other. What were the key takeaways? I mean, was everyone all in on AI? Was that the hot topic du jour?
You know, it was definitely a topic, but it was not the topic because I think every company starting out right now is starting with some kind of AI basis. So they have that advantage. But the things that people talked about more were, for example, product market fit, right? I mean, it's always a challenge. And one of the things we heard over and over again is that you think you know what this customer needs. Everybody builds what they think is needed in the market. And yet, what you have to do is constantly be making sure that you're getting feedback from that customer, because 5 times out of 10, you're off. You're off by something, right? It may not be completely wrong, but there were multiple founders who talked about it. Including April Koh, who's the CEO of Spring Health, now a multi-billion-dollar unicorn.
A portfolio company.
A portfolio company. But she talked about how they started out, and this is a mental health company. They deliver precision mental health care right now to companies. But they started out thinking they were going to do software for doctors to be able to figure out what kind of antidepressants to prescribe.
And they pivoted.
They would go in, they would pitch, and they would get blank stares. And they finally were told by someone, you should go meet with our HR department because there are so many doctors and nurses here who need mental health care.
But do these companies at this moment have the bandwidth, when I mean bandwidth, the monetary bandwidth, to be able to pivot, to keep iterating? Do they have that? Are you allocating to companies before they've got product market fit?
Yeah. We do allocate to companies before they have product market fit. You have to at seed stage because that's what you're doing between seed and Series A. But we hope we pick the founders who have the right approach to it and who have some data backing up the fact that they're on the right track. You know, it's not a perfect science, but we have a good track record.
Well, your track record is good, and we know you for media expertise, for ABC News, ABC TV more broadly. We think of you for AOL, but we then think of you for Martha Stewart. We think of you across many a different landscape. Where are you allocating into? What industry groups are most tempting?
It's a really good question. We really look at large areas of the economy that need transformation, right? So healthcare, work, financial inclusion, climate, and underserved consumers. All very large markets that need change.
They do, but climate, and dare I say it, backing diverse founders has been buffeted around some within a political climate. Are you still seeing as much LP institutional interest in allocating to solving those sorts of problems?
We are, because I think that that smart LPs understand that this is not about doing good. This is about looking at what the country looks like now, right? Massive demographic shifts over the last couple of decades. And if you want to back people who are building new companies, you're probably going to have a competitive advantage if you are supporting people who actually have lived experience with these problems, these issues.
You had Martha Stewart talking of her lived experience at the event yesterday. The lived experience for most allocators right now is some pretty heady valuations if they've got anything to do with AI in their name. But what about the rest of the space? What sort of size checks are you having to write now for a seed stage company, for an early stage company?
Well, there are two different questions there. One is what size rounds are seed founders going for, and that has gotten bigger.
Yeah.
You know, if you look back 4 or 5 years ago, people were raising for 12 months, 18 months, so they were raising maybe $2 million, $2.5 million. Now we see a lot of seed rounds that are $4, $5, $6 million. And that's because founders, it's not because they're spending more on a monthly basis, it's because they know in this market, they're gonna have to prove more. So they need that runway. They need 24 months or 30 months. So we're seeing a lot of that. We write checks anywhere from $500,000 to $2 million, let's say.
And when you get a macro context, like inflation starting to cool, the Federal Reserve maybe looking to cut rates, but record highs for stocks, what does that mean in terms of money coming in to venture capital?
You know, we haven't seen that happen yet.
Okay.
But my hope is that once interest rates begin to come down, that you will see more capital leaving the public markets and coming into the private markets again.
Well, come to us as and when you're starting to see that flow and when you're allocating the checks. It's been great to see a little bit of the work at the event yesterday.
Oh, we're so glad to have you.
We appreciate it. Susan Line, co-founder, managing partner at BBG Ventures, right here in New York. Meanwhile, coming up, look, we're going to talk content next. Paramount goes back to square one. It's rebuffed Skydance's merger proposal. I have all the details. This is Bloomberg Technology. Paramount Global, the chair, Sherry Redstone, has decided to end those long-fought negotiations for a merger between the legendary media company and, of course, David Ellison's Skydance Media. That's all according to sources. Who wrote that story? Bloomberg's Lucas Shaw. He joins us now. I mean, his saga runs and runs.
The Redstones never cease to amaze us, or they just don't take the easy option, right? She pushed for this deal with David Ellison. She seemed to want to do a deal with Skydance. She had other options. She didn't engage seriously with Apollo. She didn't engage seriously with some of the people looking to buy the family holding company. And then at the last minute, she decided she didn't want it. There are a lot of reasons that I've heard as to why.
Yeah, can you name like one or two of the most important?
Look, one, David Ellison and Skydance had to revise their deal because other shareholders felt like they were going to get stiffed. Sherry Redstone was going to get a good deal, and that new deal would have paid her less. It's up for debate how much that influenced it. It had to be something of a factor. I think she was concerned about being caught up in a bunch of litigation, which happened when she put CBS and Viacom together. Then I think there's a part of her where just, look, her family's controlled this company for decades. Is she really ready to give it up? She says she is, but she was at the altar and she ran off.
It's a legacy question, many feel, and ultimately whether she's increased or eroded value. And at the moment, sadly, some analysts out there saying this has just been a complete erosion of value for Paramount, what the deal could have got for the business.
Yeah, look, there's no great deal for Paramount right now. This is a business that was worth about $30 billion when she put CBS and Viacom together. It's now less than 10, depending on how you calculate it. Nobody's going to come and give them some huge deal that's going to make investors a ton of money. You have some investors that maybe just want it to be over with and be out of it. And Ellison represented a good option in that he was going to inject capital into the business, but a complicated option because he wanted to merge it with his company, and the valuation on his company some people see as being way too high.
What's interesting is now we wonder who are the players left in the game. We had Jeffrey Katzenberg on the show a little bit earlier in the week, and I asked him about the value of Paramount, and he was like, look, it'll still get a good deal. And then he talked to some interesting people gathering a room for breakfast. Just take a listen, Lucas.
And I will tell you, I literally went to an early breakfast, ran into Bob Iger, Jeff Shell, and Brian Robbins, all in one room at one time. The current president of Paramount, Jeff Shell, who's on Redbird, and Bob Iger, who's watching it all. It's quite a morning.
So what do you think they were talking about? Or what do we think ultimately will be deals that could be made for individual bits of streaming and other parts of the asset?
Well, look, they're going to try to execute a strategy that a new owner would have done anyways, right? They're going to cut costs. They're going to look for some partnerships in streaming to build out the business. But it's not clear whether the three guys who are in charge right now are going to be there for that long. It seems like Sherry Redstone is still interested in maybe selling her family holding company, doing a cleaner, simpler deal. That's not necessarily great news for the other shareholders in Paramount, but it would be good for her and her family. If that happens, if she re-engages with one of these other bidders, Edgar Bronfman with Bain Capital being one of them, the film producer Stephen Paul being another, then we're signing up for several more weeks of negotiations and speculation and stories and all of that. If she decides to let the current leadership take a real run at it, I think you'll see a painful but necessary change in terms of strategy at the company, which just can't figure out streaming right now.
I'm going to let the audience decide which version of events you're going to want to happen the most. But there's certainly several Netflix documentaries and various movies to be made of this saga. Lucas Shaw, we appreciate him for it. That does it for this edition of Bloomberg Technology. Do not forget to check out our own podcast. You can find it on the terminal. Go check it out online, Apple, Spotify, iHeart. This is Bloomberg Technology.